Good evening. Day 27. Good evening, everybody. Good evening. Hope y'all had a good day. Again, I hope y'all enjoyed your holidays with your family and things like that. Good evening. Today is Tuesday of the market. We are on day 27 on the journey to become wealthy. It is Tuesday of the market. Today was actually a red day. But good evening. If y'all with me, you might have made some money. I made some money today. Hope y'all were able to make some money too. So good evening. Trying to give people some time before we get into doing this thing. For those of you who don't follow my YouTube, I want to ask y'all to go follow my YouTube, like and subscribe to my YouTube channel. Follow me on Instagram. Yeah, because this is where everything I'm going to be at, on my YouTube, my Instagram. Eventually, I'm going to move away from Instagram to my YouTube. But for now, y'all will see me here going live every day. So good evening. All right, let's get this thing kicked off. So today was a red day primarily. We had the Dow up 0.26%. The S&P 500 was down 0.10%. The NASDAQ was down 0.56%. So majority of the market futures were down today. And let me show y'all. I guess I'll give y'all a quick glimpse of this. And we're looking at Webull, right? S&P 500 down 0.08%. The Dow Jones down up to 0.29%. And the NASDAQ was down 0.56%. So those are the primary futures. We can check out the Russell. The Russell was down 0.66%. Although these numbers are pretty much flat, they still are in the negative. That give us a red day, right? So we know we having a Santa rally. Well, supposed to be having a Santa rally this week. That does not mean every day is going to be green. We had a green day yesterday. We had a red day today. If y'all were with me, if y'all saw my Instagram post today, you should have made a little bit of money today and probably going to make a little bit more money tomorrow. We did an Apple put option, and we did a SoFi call option. Now, I actually averaged down in my SoFi call option because it went up and I could have took some profit, but I held on to it a little longer because I felt like there was more money to be made, and I averaged down when it came back down. So I'm hoping on tomorrow that call option goes back up and we make money. On the Apple put option, I took 40%. So 40% was $40 for me. I put $100 into the put option. It came down 40%. I took that $40 and I got out. So for y'all, 40% is good, right? If y'all had bought 10, you bought $1,000 of that option. That would have been $400 you could have made in minutes. We did that in minutes. So for those of y'all who followed me and saw that money being made today, you guys know the difference, right? Call options mean we're predicting the stock market, the price of that stock will go up. The put option means we're predicting that the price of that stock will go down. Apple got up today, so let me show y'all the charts, right? I want to show y'all the charts so y'all can see it with me, right? We want to follow along. I want y'all to be able to follow along and see these things yourselves. But we saw from a week ago, maybe 2 weeks ago, when Apple went up, we saw it come back down, right? We saw when it hit that 180 price, we knew that it came back down. So I basically just mimicked that again. I'm trying to get the right chart up here for y'all so we can check this thing out. Okay. I'm gonna go to the 3-month chart. So I'm gonna flip the screen around for y'all, right? I want y'all to look at this thing. So we know what date is this? This is 12/13. Here, y'all see on the screen, Apple went up to 181. It came all the way back down to about 173. So on today, Apple came up to 180, right? If the past tells us anything, we knew it was going to come back down. So I did a put option on that because I knew it had hit its max. You see here, it says 182.09 was the top limit. It came down and went back up again. I saw Apple coming down at 180 point. I was like, okay, let me take some profits right there. So I'm gonna show y'all. Let me see if I can get the chart in here because it went back up now. So here we go. I'm gonna go to today. Yeah, 5-minute chart. So it went up to 181 on today. Came down, and it actually went back up and came down again. Before it got to go back up, I made my 40% and I got out of that bad boy. It came all the way down to 179, 178, somewhere around that range. And I got back out. So I made my money, I got out. I made my 40% and I got out. This is today. This is today alone. This is just a 5-minute chart. This is today alone. Before I showed you a 6-month chart where Apple had did the remember, matter of fact, this is a 3-month chart right here. This is a 3-month chart. And this is where I remember you asked me about buying in Apple and I was telling you it was way too high and that it was coming back down. So this was from December 13th. Remember, we saw it get up to that 182 and we saw it come back down. I said, hey, y'all, this is a buying opportunity for us. And it actually came all the way back up to this 180 price. So I saw it go back up on today to that 180 on today. And I knew, okay, boom. Last time it got up this high, it came back down. So I bought a put option just looking at the charts. And it came all the way back down. I got my 40% and I got out. Yep. So that's how that was. So that's what we saw on today. That's how we got that one. Now, the SoFi call, I actually expected it to go up a little bit higher than what it did. But I'm guessing it came down with the pressure from the market. It had some good buying pressure, but it came back down instead of staying up. So the call option I did on that, I am down, I want to say $4 on it. I'm down $4 on that call. But if the market stays consistent, we should see that joker go back up on tomorrow. And my average for it currently is 0.54, but it's sitting at 0.52. So if everything stays consistent, it should come back up on tomorrow, and we should see some money being made in the SoFi call that we made. Apple is down, it's at 179. So even if you didn't get out where I got out at the $178.55 range, you still, if tomorrow's a red day for Apple, you still have potential to make money on a put option if you got in. But I would not jump in it tomorrow without seeing what the market was going to sit like tomorrow. So we're going to go back to what we were talking about, right? We're going to go back to our futures. Our regular routine. We're going to get back on our routine. We checked out the futures. We saw a majority of the futures were down. I think the Dow is the only one up, and it's up 0.26%. The Russell was down. Let's check out our stock heat map, right? So you guys, and I think I talked to you guys about this a week ago. I'm pretty sure maybe 2 weeks ago, we're going to rotate into some financials, right? So I was looking at some financials today. Some of the ones I think we're going to get into going to be Bank of America and maybe Wells Fargo. Those are the two that I'm actually looking at. And the only reason I did not tell us to recommend it as a buy today because they are above their minimum. And I think both of them had us a chance of losing about 20%. And we don't want to take any losses, right? We want to buy at the low range, right? We want to buy while it's low and sell while it's high. But both of these are two stocks that we should be considering. So Bank of America and Wells Fargo. I want to say Bank of America. Let's check it out. We're going to look it up, right? We're going to pull it up now. Let's pull this bad boy up now. So BAC, we're going to look at the price prediction. BAC, Bank of America price prediction. And it has a low of $35. It is currently sitting at $44. It has a median of $50, which means it has a chance of gaining 11%, and it has a high of $64. So we can take the chance. The RSI was at about 50 on Bank of America, I believe. So that's not high. It's within range, but it's still a little high for us. Our range is 30 to 50 on the RSI. We want to buy the RSI at 30 to 50, so I can go ahead and pull it up, though. We can pull it up, right? Why guess? Why guess it that we need to go do our research, right? Because that's what most people hate doing. And that's why I do this every day, so that I know we get in the routine of looking at our RSI and those things like that. So let's see, BAC, Bank of America. And I'm going to show you guys everything. I'm just over here taking my time pulling it up. So here go Bank of America, right? So on the low end, $35, right? So there was a 21% chance of dropping at its current price. The median was 50%. The high was 64%. And here's the RSI. The RSI was right at 50. So that's not saying that it's not at a good buy, but that means it's not oversold, but it's not overbought yet either. So for the past 100 days, people were willing to pay $43.68. I would say, for me, I'm going to set my buy price at about 43 to the current price, right? The current price of 44.70. So between 43.68 and the current price of 44.70. However, we would love to get it at this $35 range because this is the low prediction on it, right? That means if it does come back down, we can see we risk losing 21%. So for me, I'm thinking if it comes down if it cools down to about $43 or cools down really anywhere in the $43 range, I may put in a few $100, maybe $200 to $300, and that's just my first half, right? Remember, we buy in portions, right? We know how much we want to put in. I want to put in the financial sector, I want to put about $500 to $1,000 in over time. Not all at once, but over time. So if I see Bank of America come down, I may put $200 in it. If I see Wells Fargo come down, I may put $200 in that. So let's check out our Wells Fargo price prediction. The ticker symbol for Wells Fargo is WFC. And the ticker symbol for Bank of America is BAC. Wells Fargo on the low end is $45. So only a 7% chance of loss. So that makes it immediately a better buy for us, right? Versus Bank of America. Wells Fargo becomes a better buy because we risk losing less. We lose less on that low range. We lose less on the low range. And on the median, it's $54.25, so gain of 12%. And on the high, $67, a gain of 38%. So let me show y'all that. Make sure I show y'all that because, again, that's what we're here for, right? We do this research together. Wells Fargo is currently sitting at $48, whereas Bank of America is sitting at $44. So you can buy a cheaper stock for Bank of America at $44, or you can spend $4 more and get Wells Fargo. The low end, 45. The median end, 54. The high end, 67. Also, on the RSI was about 47. So it seems like a better option to buy, to be honest. Outside of it being more expensive than Bank of America, this one is actually a better buy. So for the past 100 days, people were willing to pay $48.35. It's currently sitting at $48.42, so it's very close to our 100-day moving average. And it's lower on the RSI for us than the others. And it has been as high as about $53 to $54 in the past since November. So that's not too bad, actually. So this Wells Fargo actually seems like a better buy in the financials than Bank of America. I want you guys to do your own due diligence and you invest in a company that you like. For those of you who don't like Bank of America, for those of you who don't like don't like Wells Fargo, you picked up one or the other, right? But we want to get in one of these because my portfolio currently is heavy in tech, right? I'm heavy in tech. I do have some financials. I do have some creative services, but it's heavy in tech. And I'm thinking that we're going to start to see some red in tech. So we want to rotate a little bit, right? We want to get into some of these financial stocks to hedge against our tech stocks coming down. So while our tech stocks are coming down, we expect our financials to go up and slightly balance it out until our tech comes back up. So Mike asks, how can a unit or group or organization do bulk buy and sell to affect the market? Or is that another topic? Hedge funds. So a unit, group, or organization is considered a hedge fund. They can really, those guys, we're retail buyers, right? We buy a single stock. We invest in a single company. Hedge funds, those are large companies that have millions, billions of dollars to invest. When they buy those millions of billions of dollars into a company, they move the price up. But also when they sell those millions of billions of dollars of stock in a company, they force the price down. So they definitely have an effect on the market. Whenever the hedge funds or the major stock owners, so like Elon with Tesla currently, we know that Elon is being forced to sell shares of Tesla, some of his shares in Tesla. Every time Elon makes a large sale, because he has billions, trillions of dollars worth of stock in Tesla, every time he sells, we see Tesla drop significantly. I don't think we have enough money to do that. We don't have no money to do that, Mike. To be honest, unless you got a few $1 million, then we don't have the money to do that. Now, as a group, if it was right now, it's only 4 of us watching, right? let's say for instance there was 500 of us, 1,000 of us watching my live right now. We all decided, hey, let's all go buy $500 of this company. 1,000 of us at $500, what does that make? Right? That's a significant change that we make. We just spent $500,000 in the company. We actually have some buying power then. As a group, a bunch of us could have a significant move on the market. But as single investors, we do not have that big of a move on it. Definitely. I mean, if you have people who are interested in this type of stuff, definitely invite them. So what about GameStop? GameStop, we bring one person next time to the live. Definitely. I mean, invite 10 people, invite 5, 10 people. Invite as many people as you want to, and especially, get them in here, get them learning. We all want to be educated. We all want to make sure we can make some passive income, make some money, sitting at home on your couch in the bed. I mean, those trades I made earlier today, as you all can hear, I'm feeling under the weather. I made those trades from my bed on my cell phone. So yes, definitely want to do that. Definitely spend as a unit. So just some things that's on our radar though. On our radar, definitely Bank of America and Wells Fargo. And our heat map is red. But yeah, definitely, I mean, if we could open up a hedge fund, that would be beautiful. Yes, that is what happened with GameStop. GameStop was actually a short squeeze. The same thing is with what people were expecting of AMC. Now, I'm not saying AMC never had its short squeeze, but GameStop definitely had a short squeeze. So what happens is, and I guess I can explain a short squeeze in layman's terms to you guys, right? So for GameStop, we have a lot of hedge funds. They were borrowing shares and selling shares that did not exist. So they were shorting shares, saying that, hey, GameStop will come down. They were betting against GameStop. Hey, GameStop is going to come down. It is not a profitable company. But then you had retail investors like ourselves, millions, not just a few hundred, not a few thousand, millions of retail investors like ourselves were going out and buying these shares. They were buying these shares, and the hedge funds did not have the shares to sell or buy. So when it was time for those shares to be bought, for those shares to be cleared, they had, instead of them having the shares, they had to spend the money. So that forced the price up, right? It's a short squeeze. It makes the price constantly go up. Okay, boom. This hedge fund says, hey, we got 1,000 shares of GameStop saying it's going to come down. But we don't have 1,000 shares because all the retail investors have the shares. AMC was the same. AMC, hey, they had 5 million shares outstanding saying, hey, hedge funds were borrowing 5 million shares, but they didn't own those 5 million shares. The retail investors did. So unless the retail investors sold their shares, the hedge funds had to pay for them, right? They had to pay us. Okay, boom, we don't have these shares. We got to pay you for those. We got to give you $5 million. That boosts the price up, right? The more people buy the shares, the more the price goes up. The more people sell the shares, the more price comes down. So what happened with GameStop? All the retail investors owned the shares, and the hedge funds couldn't get the shares, and eventually their options expired, and they had no choice but to spend the money and hedge GameStop, and therefore the price went from what? I mean, we can check it out. Let's look at the chart. GameStop was definitely a banger. I mean, a lot of people made millions. There was some people became millionaires behind GameStop. I didn't. I wasn't in it, but I mean, it was crazy. So let's look at this thing, right? GameStop was at $4.98. It shot all the way up to $325. $325. Imagine owning 100 shares at $10. 100 shares at $10, right? Let's see, 100 times 10. You spent $1,000, right? Those same 100 shares are now worth $325. You just made $32,000. $32,000. And let's look. This was January 8th. It was worth $17. On January 29th, it rose all the way to $325. So that's within a matter of weeks. It came all the way back down to $63, $50, $40, and people got it back in again at $264. So you see how that happened? That's a short squeeze. You see how sporadic it was? February 19th, $40. March 12th, $264. That's a short squeeze because the hedge funds had to pay for those shares. The big companies had to pay for those shares that they own and that they owed to the people. So that's considered a short squeeze. AMC was of course supposed to short squeeze. It didn't. It has not happened, or it did not happen, and it may not happen at this point because people are still selling shares. People are still selling their shares of AMC. They're not holding on, and that's why you see AMC constantly going down and up. So let's check out AMC. Let's check out AMC. We've been seeing it going down and up, and we can check out the year chart on this, right? AMC was sitting at $10. Let me turn the camera around for y'all. AMC was sitting at $10 on May 11th. It was at $12, $13 May 24th, and it shot all the way up to $62 June 2nd, right? That's within a matter of days it shot up. So technically that could be a short squeeze. I mean, that's 2,000%. 2,000%. It shot up 2,000%, man. And I hate for the people who bought it up here and was still got caught holding the bag, because it's been coming back down ever since. And that's not to say that it can't happen again, because currently it's sitting at $27. And this is actually a good buy price for it, because every time it comes down this low, it usually tends to come back up. So let's go back 3 months. And this is actually the first time it's been down this low for a minute. But usually when it gets down to the $23 range, it tends to come back up and people make some money and they get back out. So I will say this may be a pretty good buy range if you like AMC. If I buy it, I plan to hold it. I mean, I'm not going to spend any more than I'm willing to lose, because you can guarantee there is a big chance of you losing it. But it's also a good chance of you gaining. You saw how Gamestop was. Gamestop, those people who held for another month, they made a few $1,000s. So if you're an 8, hold on. If you're an 8, hold on. All right, so let me keep going. We're going to check out a crypto, right? So I want to check out crypto because crypto came down today, guys. Crypto came down today. So y'all know what this means, right? We know what we like our buy price at. I mean, it is currently sitting at a buy. It is sitting at buy zones. And I did tell y'all we wanted to look into Binance. I think Binance is going to be my next buy as far as crypto. I think I want to throw in a few $100s in Binance. Binance coin, BNB is the ticker symbol. It is currently down 2.4%. And I was looking at it earlier. I've been doing some investigating on it. It has a price prediction of $1,200 by the end of 2023. So that's almost double my money if I can get in now. So we are long-term investors, so 2023 is not a long time. But if I invest $3,000 in it and at $500 and it doubles my money, I mean, hey, I'm happy with that, $6,000. If I can invest more than that, then I'm happy with that. So Binance BNB is going to be my next stock to buy. So crypto is down today, and BNB is the next on my buys. We got a little piece of Luna. Luna is coming down more, so if you want to buy more Luna, now's a good time. It was sitting at $85, as low as $85 today. That may be a good buy. But I definitely think crypto right now is a good buy. And BNB is going to be my next buy. So that's really what I had for y'all today especially looking into the crypto and stock market. So the stocks, we're going to try and rotate us and get into some financial markets. So Bank of America and Wells Fargo being our top 2. You guys do your own due diligence and see if you want to get into those. We made some money on a put option with Apple today. We made some money on a call option. Well, we have not finalized the money making with SoFi on a call option, but we plan to make more money on that tomorrow. And we're looking at crypto. Binance coin is going to be a buy for us right now. And Terra Luna is a buy right now, seeing that it came down for a day. So those are the things we're looking at. Unless you guys have some more questions. Y'all remember, we want to keep adding money to our accounts. We're going into a new year. The new year is coming soon. This is a full week in the market. Let's hope the Santa rally continues on. Let's hope that you guys can make some money and end your year strong. And that's really all I got. For now. So unless anybody else has any questions, unless anybody has any other questions for me, I'll be posting this video to my YouTube. I'll be posting this video to my Instagram. Y'all be sure to comment, and make sure that you ask any questions that you have. And I'll catch up with y'all on tomorrow. Y'all have a good day.